Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 26th day of August 2021, and this is the daily report for gold and silver. We do have gold currently trading at around $17.95. That is up from the close in New York, and the Fed chairman will be speaking tomorrow, and the Federal Reserve absolutely has a lot on its plate to consider what they're going to talk about, and most importantly, whether there's a more accommodative, dovish tone coming out of Powell, or they're staying the course as reflected in the last FOMC meetings. It is a fluid situation with recent reports of a drought-stricken mid-belt in the United States, and that will dramatically increase the cost of food. We also have a scenario in Afghanistan in which 11 U.S. military were killed today in action, and how President Biden reacts to that. And then there is the economy on top of that, which of course is the purpose of the Federal Reserve itself. So with that in mind, on today's report, we will talk about positioning as we have all week. And if you haven't already positioned yourself from the long side in gold, this is the last moment or opportunity you really have to do that. We'll address that point in our charts, but first to the price board. Traders, we have gold currently up $3.30 at $17.9430. But the interesting thing about it is you want to factor in dollar strength today, which would take away from the price of gold. So you actually had some headwinds with that gain. When we look at spot, for example, according to the Kitco Gold Index, that's currently at 1792, but in normal trading it went up 675, and that's really because of dollar strength here. So we do currently have gold trading up nicely going into the Fed speech by Chairman Powell tomorrow at 1794.30. Traders, we are currently looking at a daily candlestick chart of December gold, currently printing at 1794.90, down 30 cents based upon the close in New York. However, what we are seeing is that gold was able to close above its 50-day moving average, which to me is fairly significant. The actual 50-day moving average is set at 1792 currently, and the market is trading about $2.90 above it. It's all going to come down to what Chairman Powell says tomorrow, whether or not he gives concrete information in terms of the timeline for liftoff of tapering, not necessarily any kind of rise in interest rates, and how the Fed is viewing the current Delta variant as it continues to ravage the United States. That's why Jerome Powell's speech tomorrow will be so critically important, because it will have a dramatic impact on dollar strength or weakness, on the rate of U.S. treasuries and debt instruments, as well as the price of gold or silver. If Chairman Powell's tone reflects a more dovish Federal Reserve tomorrow, we should see gold move substantially higher, above $1,800 per ounce. Therefore, all traders that want to be positioned from the long side on gold should already have positions or put them on before Chairman Powell speaks tomorrow. We've talked about stop placement, and that needs to be at approximately 1775. You have to account for these recent lows. They weren't really challenged today with a low of 81, but we could see some increased volatility as Chairman Powell speaks. Traders, silver, on the other hand, did sell off today, giving up about 22 cents. Current fixed price for September futures, 23.55 cents, down 22 cents on the day. We're looking at a daily chart of September silver futures. We can see that over the last couple of days it has traded under pressure. It is currently up approximately 2 cents. In Australia, $23.57. That is the current print. It is below 23.75. That's the 78% fib retracement level that I believe is critical that it move above. So it makes me a little less bullish on silver than I am on gold currently. But I think that both would move higher on a more dovish tone from the Federal Reserve. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow after Chairman Powell's speech. Bye-bye.